Welcome to another episode of Digital Partners AI podcast, where we help baby boomers lead businesses modernize, grow through the power of AI, automation, and digital transformation. I'm your host, Danielle Paulsonin. Today's topic is a game changer. We're talking about business fundability, credit solutions, and how traditional financial processes are being reimagined for today's tech-driven world. Joining me today is someone who's been making big waves in the space, Derick Vogel, CEO and co-founder of Credit Absolute, a company that helps individuals and businesses owners repair credit, secure funding, and understand the keys to true financial leverage. Derick, it's great to have you here. Please tell us a bit about yourself and how Credit Absolute came to life.
Oh, thank you so much, Danielle, for inviting me on the podcast today. Um, I'm originally from Ohio, Midwest, small town, cornfields, and was always one to be like, this is the right space for me. So traveled across the country to Arizona, and I've done mortgages for about 10 years of my life. And then back in the market of 2005, when the market got real nasty and crashed, and I moved to Costa Rica with a couple buddies that we started Costa Rica lending and then did real estate. And I also had a boating business. I was probably, 25, 26. So I was just enjoying life and really loved Costa Rica and the opportunities that were there for me. Ended up moving home and started working for Quicken Loans for a while. And just got tired of the corporate world. I enjoyed doing mortgages, but I was ready to start my own company. And so my son was born in 2007. So I was trying to figure out how I can be with him more. And so in 2012, I started Credit Absolute for personal credit repair and then also for business credit and funding. And so it's been a great pleasure for me because I'm education first and then credit repair second, because without the knowledge on how to manage or open accounts or how to manage those accounts day to day, weekly, monthly, just getting things deleted on the credit report doesn't always help you. And so we want to, just lead with knowledge. And I worked with a lot of credit repair companies that paid monthly fees. There was no action plan. There was no coaching. And I'm like, there has to be a better way. And so I decided to take the leap and cashed in my 401k to start my business and haven't looked back. And it's been an amazing journey.
That's great. That's how most businesses, great businesses, are born. Um, You said that you've helped countless business owners understand the importance of fundability or customers. What inspired you to focus on this part of the financial ecosystem?
Well, I think personal failure. When I started my company, I didn't really know even how to run a business. I was just a salesperson. And so I had the pleasure and opportunity to work with a close friend, Brandon, who was in a business coach and a mentor. And, I didn't even know what a balance sheet or a P&L was. I didn't. And when I say that, a P&L, profit and loss, just want to make sure everybody knows what I'm saying, because I was trying to get funding for working capital. I couldn't because I would go to the banks and I'd get denied. And when you do business applications, the banks don't have to tell you why in the business world. Personal credit, they tell you why, like too many collections or too much debt or XYZ. There's a whole list of them. But in the business world, they don't tell you. So it's frustrating because you get pigeonholed and you don't know what to do. And so I was able to partner up with some good friends of mine that I've known for over 10 years now. And we have a special software that actually uses AI now. The last 5 years has been amazing, but before we'd individually go through their business data. And so what our software does is it just identifies where that business is at. And yeah, it can be a brand new business that has nothing and is just getting started, but it could be a business that's been in business for 10 plus years, making $1 million plus a year. And they get into a place where I had a client a few months ago had bought 8 vehicles for his company, and then he couldn't get financing anymore. And it was because that he didn't have some alignment when the banks were checking his credit. He was getting red flagged. And so he came in with a couple of weeks, we fixed it, and he got $200,000 within a couple of weeks. So he was able to get
Okay.
over that little hiccup. But the biggest thing that we're trying to do is just teach people why they're being denied. And our software shows that specifically, and that's what's so amazing about it. And then they get access to a business credit team and then also a funding team. And so we always try to lead with funding first to help people identify how much money they can get approved for. And then if it's not what they're looking for, then we go, hey, well, let's look at how to fix the issues so that you can become fundable.
So basically, what you're saying, the AI that you're using not only identifies the problem, but actually gives them some sort of action plan to help them to move forward.
Yeah, it's a 20-point check system. So um, I wish we had time, I could share my screen and show you if we wanted to, but yeah, so that when you log into the software, it'll literally pull in all the business data that's like, let's say they set up their EIN number, or let's say um, they didn't set up their Duns and Bradstreet number. Well, we can help them get that Duns and Bradstreet number, and then it's like, okay, what's your address? Because a lot of business owners use their personal home or they'll use a PO box, and just having that as an address will get you denied for a loan, even if you make $100,000 a month. Like if you don't have a website, if you're using a Gmail account versus a real business email, you can just get denied for that. And so, again, the data is looking for these inconsistencies. And so then we want to sync them up and fix those. And what's cool is our system also knows exactly what you need to before you even submit the application. So it could say, let's say there's three critical points, like $10,000 a month minimum. You've been in business 2 years minimum, and then let's say it could be credit score. If one of those don't align, it's going to have two green check marks and then an X saying, hey, you need to complete this first before
Before,
you can even apply because we
yeah,
already know you're going to get denied. And we had the opportunity last year to partner up with some banks to learn their coding. And so we've built a business credit report inside our software, and you can only get it inside the software if you purchase it. But the point of me sharing that is it tells you exactly what you don't have and what you need to get the funding. So it's really cool.
sounds like
And
a
then yeah,
brilliant piece of equipment. To be fair, you carry on,
any,
Derick.
oh, and one other thing that's important too about setting the proper expectations for a business owner is, if you don't have an accountant or a bookkeeper, and you're not tracking your expenses, you're not budgeting properly, you need to be able to submit your bank statements and your P&L, profit loss, and your balance sheet to the bank so they can see if you're a credible business or not. And if your taxes need to be current. And so there's going to be some critical things if you really want the good loans. And, we have great SBA loans too, SBA acquisition. And there are traditionally you need to be in business 2 years to get an SBA loan, but there are starter business SBA products available. It's just, you have to have your personal credit has to be in alignment as well. One of our goals is teaching people how to set up their business so they're not personally guaranteeing everything. But in the beginning, um, you're going to have to personally guarantee things. That's just the bottom line. But there are certain avenues, though, that you can build the proper trade vendor account. And that's also something our software identifies for the business owner is which vendor accounts report to which credit bureaus. So there's the DMB, then you have Experian, and Equifax are the three main ones. But some vendor accounts don't report to any of them. So it's kind of pointless because it's not building the business credit. And so
Yeah,
you want to build three vendor accounts in the beginning, and then as you get that first three, it opens up the next tier to the next level vendor accounts. And typically you want 6 to 9 ultimately. So, but our system again tells you what they do, if they're net 15, if they're net 30. And so it's really just, uh, we want to take out the frustration and the challenges. It doesn't have to be as difficult as it was for me.
and I'm sure that people will appreciate not having those stumbling blocks because, as you said, when you do it by yourself, you learn all these things, and I can see that it's one of the things that you don't want people to have to experience by themselves, which is why you've put these things in place. Another question I wanted to ask was, what's one major misconception small business owners have about credit and funding that you often have to correct?
If their company, LLC corporation is 10 years old, they're like, my business is 10 years old. And I'm like, well, how long have you been depositing money in the bank account under the business name? Oh, I don't have one. I'm like, then you don't have a 10-year-old business. Your business is zero. So it's based on how long you've been depositing money into the bank account. If you have a
Interesting.
10-year-old business name and EIN and you start the business account today, your business is technically 1 day old.
What? Oh my goodness! Wow. I can
And
see
so
how.
yeah, that
Yeah,
would be
very
probably yeah, that'd be one of the major ones. There's a whole bunch, but that's the major.
interesting. So have you worked with both startups and legacy businesses?
Oh yeah, absolutely.
So how do their credit needs differ, and what's your approach to each one of them?
Well, when you're working with startup companies, it's, I think the biggest challenge is they're always just wanting that startup capital and, to get the business going. And they're like, well, I need to do this and I have to spend money here. And it's like, I understand that, but if you don't invest in yourself and the company first, then it's just going to make everything so much harder. And if the personal credit isn't where it needs to be, we have a business boost CEO plus package where we work on their personal credit and their business credit at the same time. But, you can be a startup business and we have a credit card hybrid stacking where we can help business owners get business credit cards that report to the business bureaus. They don't report to the personal credit, which is key because you don't want to be purchasing business debt
Yep.
on your
No.
personal credit card, which happens all the time. But the credit cards typically we can get anywhere from, let's say, 20 to $150,000 in business credit cards if they have a 680 credit score and above. And so that's why it's really critical we can help those startups. But with the startups, we're walking them through again the blueprint. And so we take them through this series of just simple questions: business name, business address, business phone number, not a cell phone number because that can get you denied as well. Need real business data. And a lot of people it's just they overlook these little things. And so we're looking for those little gaps to fix those first. And when you're doing it as a startup, it's easy because you do it the right way from the beginning. When you're talking to a more experienced legacy company, it's just really going in then and saying, okay, you make good money, you have good profit, but what are we missing? And so then we find those little gaps inside in that business to fix so they can then go apply for those good high end low interest rate loans.
Gotcha. That's really interesting. Okay. So, Derek, how do you see AI changing the way businesses approach credit building and fundability in the next 3 to 5 years?
Well, there's going to be always that human aspect of it where um, I think it's valuable to have the human aspect involved, just so things aren't overlooked. But the AI part of it, it's simplifying the process in the way that humans just don't have the ability to assess all the data within seconds. And with AI, we can literally look at all the data within seconds and say, hey, we know you're going to qualify for these 10 different loan types. Which loan type sounds best to you? And then if they don't get approved for that loan, well, we also are able to identify what the issues are so that they can get approved for the documentation. So it's just literally taking out all the guesswork for the business owner, but also for the account executive trying to help them get the funding. Instead of spinning wheels and maybe there's an area where the AI is like, hey, we can get you this loan that the account executive, the human missed. But then there could be also times where it's like the AI misses something and if there's an experienced enough business executive, we could say, "Oh, hold on a second. I think we might be over here." So I think it complements each other well. But the AI is just gonna instead of taking a week to 2 weeks to get approvals, we're talking 24 to 48 hours.
And that makes a big difference to somebody who's waiting for funding, and needs that
Yes,
very quickly. So, if a company doesn't modernize its financial processes, what risks does it face when trying to scale AI driven marketing and sales efforts?
what was the beginning part of the question? I'm sorry.
It's okay. So, if a company doesn't modernize its financial processes, what risks does it face when trying to scale AI driven marketing and sales efforts?
I believe that if people don't adapt to the AI, they're just going to fall to the wayside. I mean, you're losing out on opportunities. You're losing out on potential just leads in general, but you're also losing out on the opportunity to help somebody get approved. Uh, Otherwise, without the limited, technology that you have. And so if you're just trying to do stuff the old way, I mean, there has to be a paradigm shift, and if it's comfortable, then it's probably not right. And so when you're doing something uncomfortable, something unknown where you get to grow and learn and adapt to the new ways. And um, I just think that from my own experience that I got caught up and just in my habits. And then it wasn't until I was like I ran into a wall and I'm like, whoa, okay, I need to make an adjustment to just my processes, my communications, and stop trying to do so much work when you can hire AI to do it for free.
Literally. Yeah.
Like, work smarter, not harder. That,
Absolutely.
but it's just it's going to be uncomfortable, and I can only tell you that. But that's okay. Just keep your foot forward and know that consistency and the good habits, you'll be rewarded for it. And also just doing the right things for the people. Not everybody is at the same place that you want them to be, so you have to meet them where they're at and just take baby steps in meeting them at that level so that you can get them to the next step. And there doesn't have to be pressure involved. It's just like understanding, hey, I can help you here so that we can get you to this next step.
Absolutely. And, you know, again, as you said, rightly said, you have to meet people where they are. People don't always understand or get it as quickly as other people do. So that's something that you have to be able to adapt to, as you said, being where people are, and that's where they're starting from. But at the same time, still being able to help them to get where they want to go. In saying that, in your opinion, how can AI, CRMs, and lead generation systems directly support businesses that need fast cash flow and credit leverage?
Well, I think it just depending on the AI is going to be able to be open 24/7. So, when your business is closed, there's going to be an opportunity where somebody when they go online, they're excited, they want a response, and so they're going to. And if you don't have something to be able to capture that lead or capture that response from the new lead, they're going to go somewhere else and find somebody else that has the AI that's doing it. So it's important that you're setting yourself up for success and not losing out on the little nuances. And so that's why it's so important to understand how to build your business and utilize the AI. And it's important that you're not too dependent on AI, but utilize it for the areas that can manage, let's just say, responses. Because in my business for business credit or for personal credit repair, people don't want to talk to an AI. They want to talk to a real human being. And the reason I know that is because I've tested it for months. And I'm like, you know what? This isn't at a space yet that I'm comfortable and I want to be able to connect with that person because not only that, it's they're vulnerable. It could be stressful because they're like, I need money or I'm trying to personally fix my personal credit, and nobody wants to share information with the robot. Now, granted, it's getting close to where the AI is almost human-like. So I don't know, maybe another year or so we can test that out. But that's how I feel on it right now.
And you're right. Even when you're working with people in different time zones, you don't often think, okay, well, when I'm sleeping, there could be someone up in the middle of the night and they're looking at, my business and they want a response. And you're right. If they don't even get some sort of response, even if it is from AI, then they'll tend to go somewhere else. So you've kind of lost out on that inquiry, that stream of business. So, it's a good point that you're making. It's something that a lot of the older businesses don't think about. If you don't do it, someone else will.
Yeah.
So, no, you're absolutely correct. So, what's one traditional financial habit businesses need to let go of if they want to succeed in today's AI-driven economy?
What's one?
That's okay. I'm going to do it again. What's one traditional financial habit businesses need to let go of if they want to succeed in today's AI-driven economy?
I would say tough question because I feel that to let go of. Can you say the question one more time?
Of course, not a problem.
Yeah.
So, what's one traditional financial habit businesses need to let go of if they want to succeed in today's AI driven economy? What's that financial habit that businesses have that they need or should let go of to succeed in today's market with AI?
I'm gonna say it's gonna be part of it's gonna be trying to manage their accounting and bookkeeping. Understanding their cash flow because um, when you're doing that, and when you're trying to manage your own cash flow, it's very time consuming because you're just in your bank statements and you're in your P&L, you're in your balance, and it's like um, to simplify the process to be like, okay, I have this much money coming in and I have this much expenses going out, and you could be short. And so it's like being able to be front end focused so that you're not right wasting time on just stress of not being able to pay your bills or and so it's like if you can let go of that and put it into a team member's hands or like a trustworthy accountant and bookkeeper, but also there's some new tools coming out for cash flow management that allows you to look at it within seconds, and so you're not having to really spend that time. So I think that would be one really good habit to let go of, and not completely, but just not where it's consuming your days, because some people will get stuck in it every day.
That's very true. That's very true. Do you think that enough is taught in schools to children about everyday finances, like opening the
No,
bank account, what
absolutely not. No,
what the
it's
APR is on a credit card, and
no,
what's
no. They,
balance, what's going in and what's coming out, and.
yeah, no, the schools don't teach anything, not even colleges. So, in my opinion, um, you know, it's unfortunate because the schools teach you how to go into debt and to be a slave to the corporate world. And, I just pray and hope that with the right administration and the right, people leading our government, that we can change that. But I also think that it comes from the parents. It's the parents' responsibility to also um, take on that role to teach their children because I wasn't taught to it. My father was all cash based. I'm from, like I said, a real small town. And, I went through some hard lessons, a lot of debt, a lot of long term recovery. The nice thing it is, it's like I have the ability to teach my children to set boundaries and to live by a budget and not live out of their means. If you don't have the money to buy it, then don't put it on a credit card. So, um, so yeah, it's unfortunate that the schools don't teach it, but again, I don't think it's their responsibility. I think it's the parents. So
Again, I agree with you. I think we learn a lot of our habits around money from our parents, whether they be good or bad. But that's
yeah,
where, as with anything, it comes from the home first. With a lot of things that our children, are taught and things that they think. So I think you're right. Everything can't be taught in schools. It can't be the teacher's responsibility. That's where we come in as parents and have to do our bit as well. That's part of growing our children. Yeah, absolutely agree with you. Absolutely agree. Okay, so the questions I've asked you have really been there to craft and to spark thought and create some great moments for our audience, your audience, and for them to get more insight into what happens in the financial world. It's been a great talk with you today. I've really enjoyed it. Thank you for dropping some real value today. Definitely your insights around fundability, finance, and credit were very, very powerful. And as I said, I think it's something that the audience will definitely benefit from. Before we sign off, I'd like you to share how people could find you or get to know more about your business. If you could drop your socials, however you want to be found, that would be great.
yeah, no, thank you so much. My website is just creditabsolute.com, and for personal credit repair or personal funding. And then if you are a business owner looking for to see if you can qualify, it's really cool because we do a free assessment for you. It's lending www.creditabsolute.com. And then I have a YouTube channel if you're just looking how to achieve an 800 plus credit score. I have a playlist, but it's just on YouTube, just Credit Absolute. My Facebook, same, it's just the company name. Instagram, same name, Credit Absolute for all those. LinkedIn too, I have a great resource on LinkedIn and videos and training and stuff like that. Just free tools for people to use. But I really am grateful for this opportunity, and I hope to be able to share some just golden nuggets for those that didn't understand something. And if you get run into a roadblock and you're looking for a free credit action plan or a business analysis, just schedule a free appointment with me. I'd love to speak with you.
Absolutely, and that's brilliant. And to the audience, I hope that you've really gained some great gems today and that you've really learnt something. Take note of the socials. If you need that help, get in touch. I'm sure you'll get the help that you need. As for today, thank you very much for joining us. I'll see you next week. And it has been Danielle at Digital Partners AI. See you next
Thank you,
week.
guys.